Hello and welcome to Investing Channel. I'm Charlie Gibson. I'm the head of mining research at Edison Investment Research, and today I want to talk to you about the industrial metals, not the precious metals, but the industrial metals and also the bulk metals. And well, as anyone who's been following metals and markets over the last, best part of 20 years, they will know that we've been in a pretty good period for them. If you would look back over 40 years, it's been a pretty, certainly the period 1980 to 2000 was a pretty miserable period, and the period from 2000 until 2019 has been a fairly positive period. If you actually look at the performances of each of those metals separately, I can show these to you on a chart now over that period of time. That gives you some idea as to just how good the performance has been over that period of time. Now, bear in mind, if you were looking in UK terms, the stock market is about flat over that period of time, but metals on average are up about 200%. And you can see the real performances there. The best performance for a mainstream metal is certainly gold. I know it's pipped to the post there for top spot by vanadium, but that up a very impressive more than 300% over that particular period of time. Almost all the metals are up to a good extent. The chart, I should warn you, is a little bit unfair on iron ore and cobalt because the series for those two metals doesn't start until later, so you're not actually seeing the full extent of the price range over the full period. Nevertheless, it gives you a good idea which metals have been performing until now, and what is quite clear is that over the cycle, as we've seen in 2000 to 2019, it's been the monetary metals, or the monetary metal, precious metal, gold in particular, that has been taking the lead. Now, do I expect that to continue? Yes, I do expect it to continue, actually. If we move over to the next chart, we can see the same data again, but presented in a rather different way. Whereas the last chart just showed us where the metals performed over that period of time, this is a chart that shows you how they performed in order to get there. And you can see actually gold somewhat in the middle of the pack, if you like, now this is since 2016, so this is a more recent performance. So gold over the longer term since 2002, almost the strongest performer. Since 2016, it's been somewhere in the middle of the pack. The reason I chose September 2016 for this graph is because that's where, until then, the metals were moving more or less together, and then there's been this big divergence afterwards. I tried to color code it a little bit for you, but at the top you can see palladium racing away. At the bottom you can see coal falling away. In the middle of the pack is gold, and the metals I really want you to notice here, there are probably three of them really. One I've mentioned, which is coal, which is stuck to the bottom of that graph. That, of course, is very much a political football at the moment, and I expect it to continue being so. Gold in the middle of the pack. Iron ore is the one to watch then. I color-coded this red. Now, the analysts have been absolutely negative on iron ore for a very long time now, and the theory is quite simply this. The Chinese are putting in place emission control, and that is going to dampen demand for iron ore because it's going to bear down on the steel-producing regions of China. And this has been the theory, which has led analysts to be resolutely negative over a long period. And you can see that iron ore, despite that, has been a very, very solid performer. Not only that, but it has also had, in the last 3 or so months, it's had a very considerable bounce. And the analysts were calling it to go down another 20%. In fact, it went up. Now, that has created a bit of an arbitrage between the value of iron ore and the value of iron ore equities. And if you see any junior miners in iron ore and you think the iron ore price is going to stay up, then there is a pricing opportunity. The last pairing I want to talk to you about is palladium to lithium. You won't see lithium there, but palladium has been shooting up and lithium has had a pretty miserable year. And those two things can't be right. If you believe in electrification, you believe in lithium, you don't believe in the internal combustion engine, so you don't believe in palladium either, or it's the other way around. But there is definitely an arbitrage and an opportunity there. I'm afraid that's all we got time for. This is me, Charlie Gibson, signing off, but until we bring you more such opportunities in the near future, you have a very capital day.